Hey traders, this is Blake Marho with Traders Summit. With me today, I have Oscar Salem from BCM Partners. He's the CIO and founder over there. How are you doing, Oscar? Good to see you again.
Thank you for having me. I'm doing pretty well.
Yeah, it's great to have you. I know you've been traveling. You might be a little jet lagged, but I still wanted to talk to you anyway. It's been a long time. The last time we met was actually the end of 2021. And we were talking about the dollar. And at that point, you were actually pretty bearish the dollar. You looked for the dollar to hit new lows. The dollar actually just, rallied to new highs shortly after that. But then this whole situation with Russia and Ukraine took hold, and the invasion of Ukraine by Russia, it accelerated the dollar even further. So how do you feel about the dollar at this stage? And I know a lot of times lapse, so I kind of want to get your point of view at this stage.
So obviously the short term, we recognized that we were playing it against the euro. We recognized we were wrong. We bailed that. Longer term, I do think the dollar is still challenged. I think that part of the repercussions that we've seen, I think is going to prompt people to keep looking at ways to diversify away from it. It's going to be very, very difficult. The dollar is still a tremendous instrument, and in times of strife and times of stress, people are going to rush to it because there's no other thing. But I think that if you look at a longer term horizon, I think that the reign of the dollar is going to start to get challenged. As a trade right now, we don't have any dollar positions. We don't have anything. I'm looking at things. We have a little bit of a silver position left that I want to buy a little bit more. But as a trade, the bigger theme that we saw right after we spoke around February and March was the yen. And I do agree that Russia invasion of Ukraine threw a wrench in things, but the dollar, we had it wrong. It was going to strengthen interest rates, and it did. Obviously, that accelerated it a little bit more. But right now we're flat dollars.
Okay, when you bring up the yen, I mean, let's talk a little bit about the yen right now, because the yen has been super explosive to the downside. We've seen the dollar yen rally quite substantially, but not just the dollar yen. You had every yen cross has moved up quite a bit. So what are your views on the yen pairs at this point in time and the yen in general?
Right. So it certainly did move quite a bit, right? We nailed that trade. We went long Aussie yen March 3rd. Basically what we see is the inflation theme playing out, right? The inflation theme seeping into currencies, into the FX world and into the macro world. And obviously Australia, New Zealand, those commodity-rich economies really benefited a lot from that pivot, right? From when inflation kind of became unanchored, and commodities started exploding, and people started to take note. All of those crosses in the FX world exploded. We caught that. We caught that move in Aussie yen. Now we're looking at the magnitude of the move, and we can maybe share some charts and what has happened with that move, and how ahead of the game, or how ahead of themselves the market participants have become. So we decided to flatten that trade yesterday because of the magnitude of how much the market had moved. I do think that that's going to continue, though, right? We're going to let it breathe a little bit, and we want to pick spots to jump back on, because I don't think inflation and commodities are close to being. We don't think that rally is close to being over. We have a couple of plays that we do like on the other side, but that is going to be a theme, I think. Cross yen, particularly against the commodity currencies, that's going to be a theme that we think is going to have some legs going forward as well.
Okay, well, yeah, I know you wanted to show a little bit of some charts, and so what prompted you to take profits in the Aussie yen specifically this week?
Let me share my screen. Let's see. Let's remember how to do that. And basically, as a trade, it had such a tremendous move, right? So here we go. Here we go. Can you see that screen now?
I can.
Yeah. So this is a weekly chart of Aussie yen. This is what prompted us to look for that trade. We saw this incredibly accurate, great count, textbook move. And if you see that extension,
Yeah, that's a nice equal leg move.
Yeah. So the 100% would have been almost 91 3/4. But since we saw this explosion, two huge weekly candles, and we were involved at 84 1/4. That was, one thing that we preach is we don't want to trade P&L, but when you have 600 points.
I was gonna say, sometimes when it's in front of your face and you kind of got to take it off the table, right?
Yeah, so we did. So and another reason is also it's kind of getting close to the full extension here.
Yeah.
We do think, right, that this is going to continue. I mean, if we expand this chart, we do think that this is going to keep going, right?
Yeah.
Because it really has a lot of room on the monthly, and if you look at the levels that it's breaking, if this thing keeps going, I think it could really be a big trade, and not only Aussie yen, but commodity currencies versus the yen in particular, right? Aussie, Kiwi, CAD yen is another thing that we participated in.
Oscar, I want to ask you really quick, since we are focused right now on the Aussie yen, and you did say commodity currencies in general. I mean, it's been a really interesting dynamic to see these commodity currencies rise, no matter what's been thrown at them. It doesn't matter if the market is, seeing some risk aversion or not. And I think both you and I have been in the markets for over 20 years, well over 20 years now. And this is really one of the first times that we've seen this really, percolate in the currency market. So what are your thoughts with these commodity currencies in general from a macro perspective, since you do like to focus not only on technicals, but on macro as well?
Yeah, so it's an inflation story, right? So
yeah.
So once inflation becomes unanchored, right? Once people realize that this transitory story is in jeopardy, and this could be a paradigm shift in inflation, and this could prompt central banks around the world to start, moving and normalizing the yield curve, and not only normalizing the yield curve, but becoming a little bit more aggressive. Then you start looking at individual central banks, right? And what do those individual central banks are dealing with, and you look at the case in Australia, which is a red hot market, not only on the real estate side, but up and down, with a very loose, very tremendously loose monetary policy. So and if that landscape matches the technicals, which it did in this case, right, then it becomes a very powerful trade for us, right? So that's basically what prompted us to look at Aussie yen. But in general, I think that the big macro story here is how inflation became unanchored, right, and how that is seeping into the macro world now. That is one of the reasons now as well that we're cautious on the dollar longer term. And we're starting to look at ways to express that. Obviously, the euro is a big trade. We don't hate the levels here. Right? And let me open that big euro chart. This is a pivotal level for the euro, right? If you look at the
sure
long-term
yeah.
monthly chart, right? So we don't hate this level. We wanted to see, this is a monthly chart. So these things may take time to play out, but we are looking at selling some dollars at some point again, getting back on that horse. Right now, tactically, we're a little short euro, but we're trading that through an algo. But here, longer term, I think that this is not a terrible spot to look at the euro and say, hey, why is it now that how will this new paradigm shift in inflation, how will this affect currencies in general? What currencies are ahead of the curve? What central banks have acted first? Who has to catch up? How is that going to affect prices? Because everything becomes a relative value trade at that point. So in the relative value space, where is the euro? Where is the dollar? One currency that we are a little bit bearish on right now is sterling. And that's something that we've already started to do, is to sell some sterling. And when the technicals align with the fundamentals, even though we're very driven by charts and by price, we get interested, right? And one of the things that we're looking right now going forward is sterling yen, right? We recognize that the yen, Bank of Japan, is we want to call that a disaster. It could be a disaster, but if you look at if you start peeling back the charts in sterling yen, it is a tremendous risk reward trade, I think. So we've looked at that from a weekly, monthly, and now a daily perspective, and we like this. We like the risk reward, right? Clearly wrong above new highs. There is a move here. It's not as clean as you want, but there are legs, right? And then we think that it could test this support. So we, at this point, like we do everything, we measure what the risk is. Here we're risking 100 basis points, if you want to call it that, to make 500,
yeah,
or 600.
Well, I guess I want to talk a little bit about that too. The volatility has been really, really increasing in the currency market, which has been awesome. I mean, as traders, that's what we look for, right? But
Correct.
When you just said, here you are managing funds for different offices and whatever, and really as a portfolio manager, you have to look at it as, I'm risking 100 pips to make 600, where, just if you would have backtracked about a year ago, we were like, hey, I'm going to risk 50 pips to make 120, right? So volatility has really picked up. So how are you, as a trader, as a manager of portfolios, how are you handling risk at this stage with positioning and whatnot?
So that's a key right there. You nailed it, right? Everything you do, what we look for is, where's our downside, right? Where are we wrong? So as long as you have that equation, on the charts, and as long as you have that equation clear, obviously the volatility helps, right? Because it opens up more opportunities. But at the same time, you cannot relax on your discipline, right? And that's what charts are for, right? So to us, it opens up more opportunities. We do think that volatility is going to keep, a nice bid in it. We don't see volatility subsiding. If anything, when there's a big regime change in markets, and we are seeing that on the inflation side, one thing to expect is volatility, right? Another thing that we're looking at to support that higher vol theme is, we think that risk assets are a little bit saturated, right? And we've been looking at the equity indices and how that is going to be affected. And we think that the next rally, or the rally that we're seeing now, or the bounce that we're seeing now, looks to us to be completely counter, right? So a complete, if you want to call it a B wave or a suckers rally, right? And we can go to that chart, which is clear in the fangs, right? It's a very, very clean chart, right? So we think that this bounce right here, and again, this is just a thesis, right? It's not going to be exact, but we want to sell this rally.
Yeah,
we want to sell this rally because we think that is, a classic, ABC pattern, and that, looking at that chart, that is what makes us look at, hey, what about cross-yen? With the move it's had, how is that correlation working? So we start looking at those correlations, and we start looking at yen pairs, and at yen across yen pairs, and now we say, okay, let's put a little bit of a fundamental hat on, even though I'm not a big fundamental guy, as everybody knows. But then you look at Bank of England, how is it priced? The risk landscape, it's saturated. Maybe sterling is the play. You look at you look at sterling yen, and then you have a trade. Now you have a trade that has defined downside, right? And again, I'm not going to be right all the time. I was clearly wrong with a dollar. But if those bad trades have controlled downside, meaning that you don't get smoked, then your good trades, like Aussie yen, when you make 10x, if you lose 1x versus making 7 or 8x, then your long-term becomes good.
And that's what it's all about. And so, I'm glad that you walked us through that, Oscar. And look, I'm gonna wrap it up here, but I want to say, if you guys are traders at home and you're watching Oscar, make sure you give him a thumbs up if you're watching on YouTube. But Oscar, how do I find out more about you? I mean, I love following you here on the Traders Summit site and your content. You put in some really nice posts from time to time. But if I'm just knowing about you right now or learning about you right now, how do I follow you?
So we've built a website. It's biscuitcapital.com. That is something that we have up and running. We also post a lot on Twitter. People have told me I need to change my Twitter handle name, but Bell Haas is a play on my children's name. So we keep that. My Twitter is @Bell Haas. And we also have a LinkedIn page now. That is under my name, but it's BCM Partners. So we post there as well. I'm active on Twitter. I think that's a great platform. But most of our trades, all of our bigger trades are on our website, which is biscuitcapital.com. And we also have a nice little blog there that we update constantly, not only with trade ideas, but tactical trades, articles, charts. So it's become a nice little kind of trader station for a lot of people.
Awesome. Well, Oscar, I love your work. And you know what? As traders, we are wrong. Well, sometimes a lot of us are wrong more than we'd like to be. But, it is a part of this business. But controlling your risk, as you say, controlling your risk and learning to minimize risk and maximize that reward when you have those 10x type of trades like you had with the Aussie yen. That's the way you stay in this business. So kudos to you, Oscar. So thanks for joining us today. And I look forward to the next time that we speak. Hopefully it won't be 3.5 months later.
I agreed on everything you say. Those are called optimal losses, by the way.
All right.
Even though they're bad, but they're optimal losses. But anyway, thanks for having us again.
Yeah, thanks for being here. And we'll talk to you soon.
Sounds good, my friend. Thank you.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.